Hey, it's Dan Morales. This is Homebuyer Radio, episode number 84. Hey, we took a couple weeks off here in August. I have typically tried to make sure I did an episode every week as part of the podcast. And life just got coming at me pretty hard and fast, and had a couple weeks where I couldn't get to this like I'd hoped to. Appreciate you kind of hanging in there and still subscribing, and hopefully you find the content is of good value to you. But we're back on the saddle, and we're moving forward, and you should see content again on a weekly basis. But I wanted to explain why there's a little kind of lull there in that kind of early part of August. I just had a lot of stuff going on and couldn't get to it as fast as I wanted to. But hey, this week what I want to talk about is, I get a lot of questions from folks who are shopping for a mortgage, and, they're always asking questions as far as like, what's your interest rate, and good stuff like that. And of course, interest rate's important. Now, one of the things that I've been seeing a lot lately is as the volume of transactions has gone down, I see more and more kind of, I don't want to say questionable or shady advertising, but you see more of that. And you see it from some really big lenders that you would think are reputable. Okay, I'm thinking of one really large national credit union that does a lot of government financing, but they do a lot of just mortgages throughout the country. On their website, the way they publish information is very misleading. And there's a lot of stuff in the fine print that you would see. I had a client who's like, gosh, they're quoting me this really low interest rate, and, it doesn't, there's no points and there's no, fees, blah, blah, blah. It's such a low interest rate that, I'm looking at thinking, my gosh, like how in the world could they possibly offer those terms and actually still have a loan that made sense to make, right? Well, of course, once I went to their website and I started reading all the fine print, I read all the details that the client didn't read. And oftentimes the client doesn't understand because the devil is in the details and it's in the fine print. This particular credit union was offering a really low interest rate, but it came with really high closing cost. And so what happens is a lot of times clients look strictly at interest rate and they don't look at what the actual closing costs are. Now, I always tell folks, interest rate and closing costs go hand in hand, okay? Lower interest rate, higher closing cost, higher interest rate, lower closing cost. Well, which option makes the most sense for you depends on how long you're going to keep the mortgage. It can depend on how fast, you're going to prepay the loan. There's a number of variables that can come into what makes the most sense when it comes to putting your loan together. So often clients spin themselves out looking just at interest rate, not realizing that they paid a ton of money to get that interest rate. Well, is that always a bad deal? Not necessarily. If you're going to keep a property long term, it can make sense to pay to get a lower interest rate knowing that you're going to keep the loan long term. Because really what you want to look at is, part of it is how long are you going to keep the property, but the other thing that you want to look at is how long are you going to keep the loan, okay? Because you may intend to keep property for 30 years, but you may only keep that loan for, let's say, 5 or 10, right? Because maybe you're expecting to prepay it at an accelerated pace. Maybe you have another property that you're going to sell and you're going to make a principal reduction on the loan. There's a number of reasons why people may keep a property longer term, but they may not necessarily keep the mortgage longer term. So a good lender is going to want to really understand what your long-term goals and objectives are, because it's going to make a difference in which option you should be taking. Now, one of the things I've been doing a lot for clients lately is I've been showing them an array of interest rates and closing cost, because you can kind of pick your poison, okay? If you want a really low interest rate, you can do that, but you're going to pay to get that really low interest rate. Or you could take a higher interest rate, pay less money up front, and know that you're going to pay a little bit more in your monthly payment because of the higher interest rate, but you at least had the benefit of, not having to come in with all that cash up front. So, it really depends on what you're going to do with the property long term and what makes the most sense. But, of course, this is where it's really important to work with somebody who knows what they're doing. And, of course, that person should just be me. It'd save you a lot of frustration in this process. My name, again, Dan Morales. I'm with North Point Bank. You can find me at 616-931-4629. That's my office number. Or you can find me online at danmorales.com. That's DANMORALEZ.com. My NMLS number is 709729. And, of course, North Point Bank is an equal housing lender.